guys, welcome to Semi-Brain FX. Today we are going to be looking at supply and demand in smart money concepts. Okay, so let's dive in. So what is supply and demand? So in smart money concepts, supply and demand zones represent institutional trading levels where banks and big players known as the smart money place large buy or sell orders that move the market. So these are zones that banks, hedge funds, they place large orders, and these orders moves the market. So instead of random support resistant lines, smart money focuses on price imbalances, liquidity grabs, and manipulation moves made by this smart money. So what is a demand zone? Let's start from the demand zone. So what is a demand zone? A demand zone is an area of the chart where buying pressure was strong enough to cause price to rise. Okay, so demand zone is that area of the chart where buying pressure was so strong and it was enough to cause the price to move up. So that's a demand zone. So it forms when price drop in an area and then sharply moves up. So what this shows, it shows that smart money place big buy orders there. So in this situation, traders look out to buy when price returns to the zone. So let's give us an example of a demand zone. For example, if I have price moving like this, okay, all right, so see, price was coming, so what was happening here? This was price moving upwards. It created a particular zone. It created a zone. This zone is referred to as a demand zone. So it created this zone. So when price moved upwards, because of this impulse move that took place here, so when price came into this zone, it bought massively. So this is an example of a demand zone. It's an example of a demand zone. So the same thing with the supply zone. So what's a supply zone? So a supply zone is an area where selling pressure pushed price down. So it forms when price rises in an area and then sharply moves down. So what this shows is that smart money places big sell orders there. So traders look to sell when price returns to the zone. So now let's give an example of that. Example of a supply zone. So if I have price something like this, all right, if I have this kind of setup, so we saw what's happening here. So this is a supply zone. So let's note this. This is a demand zone. So this is a supply. supply zone. So this is the demand zone, so this is supply zone. So this is that area that price, there was a big selling pressure, so there was a big selling pressure here. So when price moves back to that zone, it sold massively. It sold massively to the downside. Okay, so how do we identify supply and demand zone? How do we identify a valid supply and demand zone? Okay, how to identify a valid supply or demand zone? There are things we look out for. Okay, there are things we see for we to say, oh, this demand zone valids, this supply zone, it's a valid one. So what are things we look out for? Number one, we look out for a break of structure. We look out for a break of structure. Of course, there's going to be an impulsive move. For example, coming back to this demand, there was an impulsive movement upwards. This moved massively upwards, and then it caused a break of structure. So this is a break of structure. This is a break of structure. The break of structure. So there was a massive movement upwards. So number one, we look out for a break of structure. Okay, so the second thing we look out for is, okay, we look out for a break of structure. Of course, what causes that break of structure is an impulsive move. Another thing we look out for is imbalance or market inefficiency. So when we say imbalance or market inefficiency, what are we referring to? So a market inefficiency or imbalance, also known as fair value gap in smart money concepts, it's a price area where buying and selling were not equal, meaning price moved too quickly in one direction without enough opposing orders to create a balanced move. So in simple terms, it's a gap or thin zone in the price chart where the markets move with strong momentum and left behind unfilled orders. So we are going to see how this looks like an imbalance. So it's in a three candle structure. An imbalance appears in a three candle structure. If we have something like this, you'll see something like this. Here is this. So you see something like this. It's a candle and wick. So if I have another candle here, and then another candle here, okay. Now this is 1, 2, and 3 candles. So now you discover that between this candle, and this candle, there's a gap here. There's a space here. So this is what we call market inefficiency or fair value gap or imbalance. Okay, so we'll head on to the chart, so we'll see that clearly. So if we come to the chart, okay, this is an example of an imbalance. We have 1, 2, and 3 candle. So this gap here is what we call an imbalance. Okay, let's look at another example. So we have this 1, 2, 3 candle. This gap here is what we call imbalance or price inefficiency. You see, there was this gap here. Price was not traded. There was a gap here. It was not traded efficiently. Okay, so that's a fair value gap. So another example is here, 1, 2, 3 candle. There's this gap that was created. So this is also an example of imbalance. So price was not traded efficiently. But if you look at this set of candles, price traded, Okay, this one came, covered it full, there was no space in between this one. So these are efficient price movements. Okay, but these ones are inefficiency or fair value gap. Another one is we have 1, 2, 3 candles. So this gap between this what we call fair value gap. You see what happened here. This gap was created and then price comes back to fill in that gap, but it didn't finish filling all of it, or it didn't finish filling all of it. So that's an imbalance. So this is another example. 1, 2, 3 candles. So this gap here is an imbalance. Okay, so let's move on. So say for we to have a valid supply or demand zone, you see, number one thing to look out for is that there must be a break of structure. Okay, after an impulsive movement. Of course, that impulsive movement will cause a break of structure. And then number two, we'll look at for imbalance. All right, so let's go ahead on to the charts and to see example of what we are talking about. So coming here, this is a chart. So we're looking at for example of supply and demand, supply and demand zones. Okay. All right, let's start here. See, number one, we are going to look at for we to have a valid supply or demand zone. There is going to be number one, a break of structure. Then number two, there's going to be price value gap. Then number three, it has to be in line with the market trend. Okay, for example, if we are looking out for a demand zone, okay, a demand zone, that's a buy zone. It means the price has to be trending upwards. Okay, so we are following the direction of the trend. So number one, it has to follow the direction of the trend. So price has to be be moving upwards. Then number two, there must be a break of structure, an impulsive move that breaks structure. Then number three, our fair value gap. So we are going to be looking out for those things in this chart. So now let's look at. So now this is an example of a demand zone. So first of all, what happens here? We see price rallies here. It came and there was a break of structure. There was a break of structure to the upside. Okay, let's use this. There was a break of structure. There was a break of structure here to the upside. And where did it happen? It happened here. This is where it started from. Okay. So this is the zone. So number one, for we to know a valid demand or supply, we said, of course, it's going to follow the direction of the trend. So we are looking at for demand zone, meaning it's rallying upwards. So we are following the direction of the trend. So number two, there's a break of structure to the upside. So there's a break of structure. So this is our zone. A massive movement upward happened here. You see the candles, bullish candles, big candles. Okay, and the break of structure. So after that break of structure, another thing we look at for is imbalance. So now this was the candle that caused that impulsive move. This was the last candle, the last down candle. So for a demand zone, is going to be the last down candle that caused the impulsive move that broke structure to the upside. Okay, so this is that down candle. And then what else do we notice? There is an imbalance. So this candle, there is a gap in between it, in between these candles. So this little gap here is what we call an imbalance. It's what we call imbalance or market inefficiency. If you zoom this, you see it. So between this our down candle that we choose as our zone, this is our down candle, our last down candle, and then the second candle that follows and the third candle, you see that there is a gap here. so that's imbalance. Okay, so we can say that this is a valid demand zone because number one, it's following the direction of the trend, which is uptrend, and then there was a massive movement upward that broke structure. So there was a break of structure here, BOS, there's a break of structure here. Okay, and then there's also an imbalance, price inefficiency. So we discovered that as price rallied up here, broke structure, price came back, and then there was a massive buy momentum. Okay, there was a massive buy momentum. So this shows us that this is a valid demand zone. So alright, so let's move on. So let's look at for another zone. So now after this massive movement, we can also consider this to be okay. So this is another demand zone. So this is another demand zone. So these zones are actually zones that we are looking at for. When we see them, it's a valid zone that we will look at for a buy. Alright, so let's look at for another demand zone. This is another demand zone. Why? Because there was a massive movement. Yeah, a massive movement that broke structure. So this was a massive movement, and there was a break of structure there. There was a break of structure to the upside. There's a break of structure to the upside. Break of structure to the upside, and then there is also an imbalance. So remember, this is the candle that caused the break of structure to the upside. This is that candle. Okay, so 1, 2, 3 candle. That gap between them is what we call market inefficiency or imbalance. Okay, so this is imbalance, inefficiency, price inefficiency. All right, so we'll see now. To confirm this as a valid zone, there was a massive movement upward that caused a break of structure, and there was an imbalance. So you see what happened here. When price came back to this zone, it bought massively. Okay, so this is a demand zone. This is a demand zone. All right, so let's look at for another demand zone. Okay, so this is also another demand zone. So price came in, it broke structure. There was a break of structure. Yeah, there was a break of structure to the upside. There was a break of structure, and then this is the candle that caused the last down candle that caused the break of structure. The last down candle that caused the break of structure, and then this is an imbalance. There was an imbalance. There's an imbalance. Yes, that's between this candle, and this candle. That's space in between them, known as imbalance or market inefficiency or fair value gap. So impulsive move, the last down candle, there's a break of structure, there's an imbalance. So this is a valid supply zone, but valid demand zone rather. But you see what happened here. Price came in, it's invalid. It didn't hold. So this demand zone did not hold, so it was invalidated. Okay, of course it happens. So it's not 100%, but most often than not, this is how we spot at a valid demand zone. All right, so this failed, this didn't hold. So let's look at for another demand zone. All right, so let's look at this, please. This is another demand zone, right? Yeah. So see, this is the last down candle that caused this break of structure. There was a break of structure to the upside. The break of structure to the upside. There's a break of structure to the upside. Break of structure to the upside, and this is an imbalance. There's an imbalance. If we to zoom into this, Now this is the last down candle that caused the break of structure to the upside, and then between this candle, the second candle, and the third candle, there's a gap between them, what we call imbalance, price inefficiency. Okay, so have an impulsive move, we have a break of structure, we have an imbalance. So we see that when price move and rally back to this place, there was a massive movement upward. So this is a valid demand zone. All right, so let's look at for a supply zone. So in demand zone, of course, we look at buying, but for a supply zone, which is downward, so we look at selling. So let's look at for a supply zone in this chart. All right. To give us examples. Okay, so we saw what happened here. So when price came, we're looking at for demand zones here because price was running upwards. That's in an uptrend. So remember, we follow the direction of the trend. So now looking at for a supply zone. Supply means supply zones. We're actually talking about that impulsive move downward. Okay, impulsive move downward. Okay, coming back to this, let's look at the supply zone. So there's going to be an impulsive move that causes a break of structure downward. So when price rallies back to that zone, it will sell massively. So now let's have it in the chart. So remember, price getting to this place, it was in a buy uptrend, so but there was a change of character here. So there's a change of character here. So price came in, there was a change of character. So instead of going up, it formed a lower high and a lower low. So price came in, there was a break of structure downwards. So this is what we call a change of character. If you look at our previous lesson, we talk about break of structure, change of character in market structure. So this now becomes a change of character because change of character, because there was a change in the market bias from bullish to bearish. So now there's a break of structure to the downside. Remember, we said change of character is a break of structure as well. Okay, but we call it change of character because it's actually change the bias of the market instead of it changed from bullish to bearish. All right, so there's a break of structure to the downside. Now, where is that zone that caused that massive break of structure? This is the zone, and this is the candle that caused the movement downward. So that's the candle right there. That's the candle right there. So we see there was a break of structure to the downside. Okay, there was that massive movement down. There was a break of structure, and then we have price inefficiency as an imbalance. So if we see this is our last down candle, the second candle, and the third candle, there is that space in between them known as fair value gap or price inefficiency. So we can now say that this is a valid supply zone. This is a valid supply zone. So we are looking at for price coming back to this zone, and then we'll sell massively. So we wait for price to come. So this is what the price market was doing. So it didn't enter our zone here, but when it got to this point, it came to that zone, to that valid zone. So the moment price got to that zone, it sold massively. So this is a valid supply zone. So let's look at for another supply zone. Remember, we are following the direction of the trend. So let's look at for another supply zone. So we see another one here. What do we see here? Now here there was a break of structure to the downside. Yep, break of structure to the downside. It's a break of structure. to the downside. Now this is that point that impulsive move happened. So yeah, so this was the last down candle. This particular candle is the last down candle that caused this impulsive move that broke structure. Okay, so after that break of structure, there is imbalance between this candle, this second candle, and this third candle. So that's imbalance there. That's an imbalance right there. Market inefficiency. Okay, so that means this is a valid supply zone. So what happened? The price broke structure, and when it came, it rallied there. It sold again massively downward. Okay, so this was a valid supply zone. So let's look out for another supply zone. Okay, now this would have been a valid supply zone. Okay, but it didn't hold. So it happens like that at times. Like I said, it's not 100%, but most often than not, it will happen. Okay, all right. So now this was a break of structure. We'll see what happened. There was a break of structure downwards. There was a break of structure down. You see this break of structure to the downside. Okay, so this impulsive move, this impulsive movement. So this was the zone that caused that break of structure, and there is imbalance. But you see, when price came in, it did not respect this zone, so it got violated. Okay, so it got violated. All right, so let's look at for another supply zone. Okay, so there was also a change in market structure here. So there was also a change in market bias. There was a change of character here. So market started moving upward. So we can also spot out demand zones here. Okay, so this is a demand zone. This is a demand zone. Price came in 1, 2, 3. There's an imbalance in between. So when price left this zone, and there was a break of structure here. There was a break of structure. There was a break of structure to the upside. And then when price came in, it tapped into that zone and it moved. So and on. All right, so let's continue. So this is also another zone. This is also another valid zone. This is an impulsive movement downward that broke structure. Okay, this is a break of structure to the downside. Now this was the last candle. This is the last candle that caused that break of structure. That's the last down candle. This is the last down candle that caused a break of structure. But if we should go to a lower time frame, okay, we'll have it. If we go to another time frame, we'll have something like this here. Okay, we'll have something like this here. So this is an impulsive movement, and then this imbalance, and then when price came back here, it sold massively. So let's look at from other supply zone. Okay, this is also another supply zone. This is also another supply zone. So this is the last down candle. This is the last down candle. This candle right here is the last down candle that formed before this movement downward, and then there was a break of structure here. There's a break of structure downward. So, and there's an imbalance between this candle, this second, and the third candle. There's an imbalance here. And then when price came into that zone, it sold massively down. Okay, so there's also another zone. There's another zone. Okay, this is another zone. So there was a break of structure. There's a break of structure to the downside. There's a break of structure to the downside caused by this momentum move downward. So was a break of structure to the downside caused by this zone, and so this is the last down candle that caused the break of structure. This is the last candle that caused the break of structure, and then in between this candle, this one and this one, there's that price inefficiency there, so that's imbalance. So that tells us that this is a valid supply zone. So see what happened. Price came in, rallied, and got to that point, and it sold massively. Okay, it sold massively, and that was it. So this is how to spot demand and supply zones for a good entry. Okay, so if you can spot at this zone, you will know where exactly to buy and where exactly to sell. This is also another zone. This is also another zone. Why? Because there's a break of structure to the downside. There's a break of structure to the downside. This is a break of structure to the downside, and this is that movement downward caused by this last down candle, and then there's a price inefficiency here. Okay, so we're expecting price coming back to this zone, coming back to this our zone, something like this, and to go downwards. So this is what we are looking at for here. Looking at seeing something like this. Okay, so in summary, we'll see in looking at for a supply or a valid supply or a valid demand zone, we see number one thing to look at for is that it must follow the direction of the trend. So if it's for a demand zone, the market must be in an uptrend. Okay, that's the first thing to note. Then the second thing to note, there's going to be an impulsive move upwards that causes a break of structure. Okay, it's an impulsive move that causes a break of structure, and the next thing to look at for is an imbalance of market inefficiency. And when you look out for that, you see that price will rally back to that zone, and then you have a valid demand zone to look at for a buy. So the same thing with the supply zone. Okay, so take time, look out for example of this in your chart, look out for it, take your time and go through it and practice. Okay, so in our next lesson we're going to be looking at other block and fair value gap, much more liquidity and entry criteria. So just take your time, go through our previous videos, understand the chart, understand market structure, understand how to spot at the right supply and demand zone. Okay, the more you practice, you get better at it, so that whenever you look at the chart, you know exactly, you have an idea of what the market is doing. So with this, you'll be able to spot at the right place to place your trade. Okay, so till I see you in our next video. Bye for now. So if you have any question, just just ask the question in the comment section, and then also if don't do well to like, to subscribe. See you in our next video. Bye.